One of the most important skills in the trading game is being able to read the market with clarity. And ladies and gentlemen, that starts with top-down analysis. Top-down analysis is the process where, as a trader, you use multiple time frames to get a bias for the day or for the week. You're starting off with the higher time frame, daily, weekly time frame, and working your way down to the lower time frame where you will be executing. The higher time frame is where the key levels are formed, and you can see where the higher level trend are. It's like starting at the top of the mountain and scaling all the way back down. And top-down analysis is going to help you come into the market, gain confidence, trade with precision, and most importantly, trade with the institutions, the big boys. And ladies and gentlemen, I'm going to be walking you through my step-by-step process on how you can do top-down analysis for consistency and profitability. And the reason why this is important is because a lot of traders lose money in the market because they're focusing on the execution time frame. These are 5-minute, these are the 15-minute time frame, these are 1 minute, even 1 hour. If that's where you're focusing on, because that's where you're going to be taking your trade and you're spending the most amount of time there, you're going to miss out on the big picture in terms of where price goes, because the higher time frame, like the weekly, like the daily, they control the lower time frame. So you doing your top-down analysis is crucial in stacking the odds in your favor. So I'm going to be breaking down a 3-step process that you can follow when you are doing your top-down analysis. And the very first step is going over to the higher time frame. That's going to be the weekly time frame. Right now, we're taking a look at gold. If you're coming to the market, let's say on a Sunday night or even a Monday, and you're looking to say, okay, where is price going? You start off at the weekly time frame because you want to get an idea of what happened last week. This week, we're taking a look at gold. Last week, we can see that this was the candlestick from last week. Price was relatively bearish. And so far this week, we are seeing quite the bullish momentum. But the main thing that you're looking for is a trend, movement in one particular direction of what the market is doing overall. And what you can see here is price is making higher highs, right? And higher lows, right? Higher highs and higher lows. So overall, the market is moving in the upside. So you're going to map out the most important levels that price is likely going to be reaching for. Based on the buyer and seller concept, if you have watched that video, I would highly recommend you check it out if you haven't. We know that when buyers are coming into the market, they are targeting the highs. So based on the buy and seller concept, if price is making higher highs and higher lows, you want to focus on being a buyer because price is targeting the high. This first process is taking a look at the weekly time frame and the daily time frame and paying attention to the market structure. I also call this process analyze process. So the very first step is analyze, right? And step number 2 is going to be anticipate and execute. And we're going to be breaking it down all the way until we get to the execution aspect. But as of right now, we're starting with the analyze step. So here, you're paying attention to the higher time frame, looking at the market structure. And right now, what we see on the weekly time frame is that price is making higher highs and higher lows. So as a byproduct of that, you want to try to place your trade when you scale down to the lower time frame to the upside, because that even though we could see sellers dominate, there is still a high probability that buyers are going to come into the market. And one of the main things that you can also do as well when you're paying attention to the larger time frame and trying to figure out who is in control is you want to pay attention to momentum. And momentum is the rate at which the market is moving. So if you see price moving up in one particular direction aggressively, that likely gives you the clue that, hey, buyers are currently in control. So if you are selling and you're taking sells here, you want to be a little bit cautious, protect your stop loss or protect your capital quick as possible. So you're paying attention to this. You are mapping out, okay, some important lows. We have this low right here. We know that if price is able to break through here, that's likely going to be something significant. We're mapping out some, major highs, and we've mapped out this level as a major high. You go over from the daily over to the 4-hour time frame, and you start to pay attention to that. And what you're ultimately looking for is important levels that price is going to be responding to, key levels. And those key levels can come in the form of let's say support and resistance, but personally, we focus on highs here, right? The highs are going to be the most critical levels because that is the main liquidity objective for the market. If price now wants to turn around, right, from being in a seller's market to being in a buyer's market, how you're going to know that is by price making change in the market structure. So market structure and the highs are important. Right here, we see that price was making lower lows, took out this low right here, and we see the market continue its move to the downside, making lower lows, right? A high here, lower lows, right? And over here, so we see the market made a high here, made a lower low, lower high, and then continued a move to the downside here. You want to start to pay attention to the change in market structure because we know that on the daily and on the weekly time frame, buyers are still in control. So over here, we got a little bit of a change in structure on Monday as the week started, and what we see here is price started to push up aggressively. And when buyers are in control, they target the highs. So your main focus now, as you come into the market, you do the analyze, right? You do the analyze process, which is on the weekly, the daily, the 4 hour, and you go over to the 1 hour if you are taking your trades on the 1 hour as a swing trader. Okay, this is where you're going to be executing. As we start to get towards the execution standpoint, before that, you have anticipation. So what we're going to do here, because we're using the live charts, we're going to be going into the individual sessions and seeing the opportunities. Actually, right here, we started to see the change on Monday. So what we're going to do is we're going to scale down to the 15-minute time frame because this is gold and it moves extremely well. And this brings us to step number 2, which I call anticipate. And once you've done the analyze process, it's just you identifying who is in control. Are you going to be a buyer or are you looking to be a seller? The next now is you coming into the market to anticipate when price is going to move in that particular direction. So we've identified that the higher time frame is very much bullish because we can see the trend. Now, step number 2 is to anticipate. And how you do that is by coming into the market at a particular time of the day. And that's what I call time and price. We're going to go over here and we're going to add session breaks. Session break is going to break down the market in a 24-hour period. And in a 24-hour period, we know that we have the Asian market, we have the London market, and we have the New York market. If you are a London trader or an Asian-based trader, you're going to be coming in at a particular time of the day. Every session has a 3-hour window of opportunity. The Asian market, will have an opportunity where price moves extremely well. And then the London session will have an opportunity. So let's say if you're a London trader, you want to come into the market at about 2 a.m. Eastern time. That's when price is going to be moving, which is about 7:30, 8 a.m., like London time. So let's take a look right here. So this would be, 1:45. So this would about the start of the London session right here on the 15-minute time frame. And what we see here is, 2 hours into the London session, price ultimately took off on Monday and buyers were able to dominate. Now, if we come into the New York session, this is where you're coming into the market and trying to get trades at a particular time of the day. The London session will have its window between, let's say, 2 a.m. to about 5 a.m. Eastern time. The New York session will have its window of opportunity between 7:30 a.m. till about 10:30, maybe even 11 a.m. And then some days, which are like this, you're going to have price distribute a little bit later, and price, moved up. This was about 12 p.m. We started to see price, move to the upside. But the analyze process or the anticipation process means that you're coming into the market at a particular time of the day. So you pick one session. If you're trading the New York session, that's the session you're trading. You want to come in, give yourself a little bit of time to be able to go through this analyze process, right? Break down the higher time frame and then give yourself a little bit of time, or to be able to get in sync with the market, what price is doing. So what I like to do is let's go over to today trading. I took a live trade with gold this morning and it was very profitable. So this was the opportunity. This was the place. So Tuesday, right? This was today. We came into the market at about 7:30. So let's say this is 7:35, right? So this is 7:30. Came into the market, broke down the higher time frame and said, hey, Manuel, it's probably best to be a buy today because weekly is bullish, daily is bullish, market structure is very much bullish. So there is a high probability that we're going to see price continue to move to the upside. With that being said, the London session was also, bullish as well. I came into the market, did my analyze process, and now I am anticipating price more buyers coming into the market. So I marked out my zone. Now, a lot of traders spend too much time focusing on their strategy, but they miss the analyze process, sticking with the higher time frame and trading alongside that, because if you do, it's going to increase your overall probability, and also being patient and watching and letting the market set up. Don't spend too much time on your execution time frame. You want to collect as much data as possible. I'll give you another piece of information that is going to help you when you are doing your top-down analysis. So after you've broken down from your top-down analysis from the weekly, the daily, and those time frames, what you're looking for is momentum, right? You're looking for market structure. You're looking for clear signs that one side is in control, unless you have, the market moving sideways, which kind of like, okay, well, you're in a range. But if you can see the market moving in one direction, you know that is where the institutions are moving price, and that's where you as a trader want to take your trades, right? You want to be in line with the institutions, because when liquidity comes, it's going to move really well and you're going to lose less trades if you stick with them. Another piece of information that is going to help you, especially when you scale down to the lower time frame, is paying attention to the session highs and lows. We have the session break. So this is the start of a new session. I talked about just now, we have three main sessions: the Asian, the London, and the New York session. So I live in the Eastern time zone, so I'm going to break it down to you in Eastern time. The Eastern time Asian market, right, usually comes in terms of liquidity, 8:30, 9:30. That's when you start to see Eastern time. That's when you start to see the liquidity move. And right here, this is about 8:30, right? So we had the Asian low, form. So this is where the Asian market, you want to start to pay attention to the lows, because if the Asian session right here, so we have the Asian low right there, right? And then right here, we have London low. So let's take a look. This would be at about 2 a.m. We have the London low also established. So Asian session was very bullish. And if the London session is also bullish as well, that usually means that there's a good chance that we're going to be seeing a bullish New York session. And this is things that will add to your overall confluence. Using market structure is great for the higher time frame and also great for the lower time frame, but you can add confluences like the Asian low, the London low, and London high. These are all things that will help you. If price is bearish, you'll likely be focusing on the London high. And if you're coming to the New York session and you're seeing the London session was bullish, you want to be paying attention to the London low. So hopefully I didn't lose you there. Right here, we came into the market at about 7:30, and now we're seeing, price essentially play within this range. We got involved in our trade with a market structure break while price was still within the range. And this was it right there. So this was the opportunity that was executed. So this is your step number 3 now. So step number 1 is to analyze. Step number 2 is to anticipate. You come to the market, you give yourself a little bit of time to watch price, observe the market. So we came in at about 7:30, right? So this is 7:30. We watched for price as the market continued to struggle. Price stayed within this range, making lower lows and lower highs. Eventually, sellers started to fail to break below this level. And at about 8:16, 8:17, we had a break of structure after the market had failed multiple times to trade below this level. This is now where you start to anticipate more buyers coming into the market and you get ready for your execution. For me, this trade was executed right here. I got involved, right there, and boom, right? So we took, it was about a 43 pip SL and, got, I believe, just 100 plus pep. So when you're doing your top-down analysis, this is essentially what you do. You start off on the higher time frame, weekly, daily, pay attention to market structure, find out who is in control, if buyers are in control. On the lower time frame, you want to be a buyer. It increases the probability. As you scale down to your execution time frame, before you execute, you want to anticipate. You want to give yourself enough time for you to watch the market and see whether you were right in terms of your bias or you were wrong, or what the market is doing. And if prices confirming what you see, identified on the larger time frame, that's when you look to get involved. If it doesn't, I generally sit out because I don't know what price is doing. I only trade when the market fits what I have analyzed and what I think will likely happen. If it's doing something completely different, then of course it doesn't fit my game plan, so I sit on the sidelines. This is it. And this trade that was executed here, we'll go over to my MT4. You can see that execution was right here. I'm not going to show. So this trade that was executed, you can see that right here. It was, in terms of numbers, was a $9,000 trade, and we made some profit and walked away. So it's not just all talk. Ladies and gentlemen, when it comes to doing your top-down analysis, these are the main steps that you want to follow. You want to analyze. Start off on the higher time frame. Find out who's in control. If buyers are in control or sellers are in control, boom, right? That's what your game plan for the day is. As you scale down to the execution time frame, before you execute, you want to anticipate by watching, observing, seeing what the market is doing. And when price fits that objective, you strike and you execute. Ladies and gentlemen, hopefully you enjoyed this video. If you enjoyed this video, you learned something today, give it a thumbs up. And if this is your first time interacting with the channel, make sure you hit that like and subscribe button. It's Emmanuel from LiveFree. Thank you guys for watching. Till next time, peace.